First of all, welcome everyone and appreciate you setting aside some time from your busy day to join us for this should be an informative and fun roast. Um, to introduce myself, I'm Nevin Raj. I'm one of the co-founders and the COO of Grata, the leading deal sourcing platform. And I'm joined today by two of our esteemed guests who are experts in sourcing deals. First is Paul Dondas, who is the founder and CEO of Artemis Origination. Paul has over 15 years as a sales and business development executive. Paul started Artemis as a global boutique M&A advisory firm that he came out of Equitech about a year ago. Artemis does buy-side advisory for the tech and consulting sectors. And when Paul was at Equitech, he actually ran market intelligence and pre-transaction advisory. So he's very used to sourcing and building relationships for both the buy side and the sell side. And prior to that, Paul's experience at Citi and M&A back in the 90s. He's done business development for a tech incubator through the dot-com years. He's been a management consultant himself. And he's also been a hospitality and leisure entrepreneur in LATAM. So a lot of contributions that he can make to understanding outbound from a lot of different angles. Excited to have Paul here with us. And our second guest is Ryan who's one of the founders of G-Spire Group. And I'm sorry, I misspoke before. Ryan has over 15 years of experience as a sales and BD professional. He started G-Spire 2 years ago and now focuses on helping lower middle market companies in the 5 to 50 million revenue range grow through M&A, as well as fractional executive advisory services. He works on strategy, outreach, valuation, due diligence, capital raising, and integration. And he's done 12 engagements, closed 5 deals, and is currently working on 7 live engagements. So excited to have them both to give us some advice on how to do good emails and how to get deals over email. Before we get started, let's just talk about the why we're here today. We're here today because a lot of us are trying to source proprietary deals because the market is competitive. There's a ton of AUM in the private markets, close to 10 trillion now. There's 3 trillion of dry powder that's getting deployed quite rapidly. The average auction has 100 bidders. So it really pays to be the first in the door. And what better than a first correspondence with a founder than an email? In addition to this, we know that proprietary sourcing works. It improves returns by 10 to 20%. This is based on CPRIS data, where they sampled about 107,000 PE-backed companies, 11,000 funds. The average middle market deal of 150 million, that's $13 million in your pocket for a proprietary deal. So we know it works, we know it yields returns, but still the ways that firms do it sometimes doesn't always resonate with founders and executives. So I'd like to open us up with Act 1, straight from the founder's mouth, where one founder that we know actually who sold his company recently created a video for us to share his experience. So let's kick it off.
Thank you for joining me on this roast of bad outbound emails. Hi, I'm JD Beebe. I'm the co-founder of a technology company called ThankView that was acquired by Rubicon Technology Partners in 2021. My name is JD. 2 letters. Seems simple enough, except people who send mass mailers don't realize there's an issue with us initial folks. Because when I see an uppercase J and a lowercase d, I know that you're using merge fields and it's not personalized. And if it ain't personalized, it's going right in the trash. Next M&A email party foul. Don't send me the exact same email copy every 2 days. I'm busy, not stupid. It's unoriginal and it shows that you don't really care about my business in particular, so I'm not going to respond. Now to end my time, I'd like to give a shout out to some good outbound email sourcing. Big shout out to our friends Horizon Partners who represented us in Evertrue in our sale to Rubicon Technology Partners. We were in touch with them for years before the actual deal, and they were always quick to respond. They provided value right out of the gates with no expectations, and they were always there to make me and my co-founders feel heard and important. So that's why they got our business, and that's why they represented us in the deal. So cheers to emails that lead to relationships that lead to getting deals done.
We thank JD for that lively intro. So without further ado, let's get started. Let's look at the emails. So first, as a disclaimer, yes, these are all real emails sent by real deal makers, investors, corporates, investment bankers to real executives, founders, CEOs. None of this is made up. As a disclaimer, we're going to show you some ones that were less well received and some that were better received, and we're going to work our way up. So let's start off with the first one. I'm going to read it out, and I'm going to have Ryan and Paul jump in and give us some feedback here. So the first email was, and these are all sanitized, was investor intro via LinkedIn. Hi, founder name. I'm an investor looking to invest in IT companies with 1 to 10 million in top line revenue. Your company came up in my research. I'm requesting a connection to see if you might like to chat about the possibility of working together in some way. Cheers. All right, guys, what do you think?
Well, I mean, the first thing that pops out to me, I mean, you know how many IT companies are doing 1 to 10 million in revenue? I mean, right off the bat, it's pretty generic. There's no personalization. Ending it up with, let's find a way to work together in some way. Again, it's pretty generic. I would like to have seen something more specific around, why they were reaching out. That'd be my feedback on this one.
Well, I think there's no sense here of what the benefits are. As in any sales situation, it's important to sell the benefits, not the process. No evidence of that at all.
Yeah, and if I'm a software founder getting an email calling my company an IT company, that's probably not the best way to start off a conversation. All right, so that's one. That's a softball for you. Let's go to number 2. Hey, founder name. Are you raising for company name? I'm working with our investor relations team at our firm. They're heavily interested in the SaaS space and are looking for Series A plus investment opportunities. Is your company raising?
I mean, it doesn't seem like this investor knows anything about the firm they're reaching out to. They should, I don't know, they're lacking their ability of communicating their credibility. There's no personalization. I mean, I hate the term, are you fundraising? It's, it's like they don't know. So why are they reaching out? So this is, I don't know, it's pretty generic, and I don't know if there would be anybody responding to this outreach, in my opinion.
Yeah, I think you said it all there, Ryan. And just add, if you don't like being asked, you fundraising, we get asked twice. So that's repetitive on top of that.
All right, let's try a third one. Also via LinkedIn. This is founder name. Do I understand correctly that you are currently doing a round of funding? If so, I might introduce you to some of my fellow investors. Please send to my assistant your executive summary with web address and contact info. We will review the information, and if we see a possible fit, she will schedule a call for us to discuss next steps. You can find more information about me in my links below.
I mean, when you're doing outreach, I mean, you're trying to establish relationship. I mean, to outreach, do an outreach campaign and then redirect to somebody else, and you're going to make the recipient do work to schedule a call. I mean, that I think that's a huge no.
And it's not just any old work either. There's multiple steps in this. By the time you've woven your way through the maze here, I think you deserve a pat on the back and probably a round of funding just off the back of that. So I wonder how many thousands of these have to go out to get one response.
And one thing to note with these first 3, they were all from LinkedIn. So a lot of these had a restriction on how long they could be. So Paul and Ryan, when you're restricted to a very limited number of characters, how would you advise being more personalized, but also using that limited space that you have?
Yeah, I mean, I think it's knowing why you're doing the outreach and doing some homework and being brief. I mean, I think being brief is something you should always be striving to do in some level. but it's you want someone to feel like you're reaching out for a purpose and it's not just some generic spammy outreach.
Yeah, if you can get personal in some way, that's obviously the best recipe. When I say personal, I mean if you know someone in common, it puts some level of responsibility to the recipient to come back to you on that, just out of respect for the mutual contact for a start. But also if you found some news that something on their profile in LinkedIn that's specific to them that you can comment on, I think that just at least make sure that it's read in a different way and totally demonstrates that you've done specific research on them.
Yep, I keep hearing customization, personalization, but Paul, I think you brought up a great point. If you're on LinkedIn and you can see who your connections are and who your third-party connections are, you might as well attempt to reference one of them in the short space that you have. Let's look at the opposite one. So this email was actually sent to a non-healthcare company. I won't read the full one, but I'll read the start. We hope your year is off to a terrific start. Our firm is actively looking for new investments. We seek to partner with founder-owned healthcare services and product companies anywhere in the 1 to 3 million EBITDA range. We team up with founders and executives that are looking to accelerate organic growth, execute add-ons, and roll up significant equity, 20 to 40%. We are a diversified investment management firm with 3 billion in AUM. I think go on to list all their investment criteria and all the sectors they care about and their portfolio companies. So this email actually went way below the screen. Thoughts on this? It's the opposite of what we saw before.
Well, this is the classic case of kind of talking too much about yourself. I mean, when you're doing outreach, what kind of value are you bringing to the party? This is just saying, here's who we are. Look at how great we are, with no demonstration that they've done any work to understand the business that they're reaching out to. And they're just highlighting who they are like that. Like that's something that's going to resonate with the recipient.
So we tend to say that recipients are short of time, and so we have to get attention and so on.
Yeah.
Probably even underlying that is the fact that we're all pretty selfish on one level when whether we've got time or not, and we're in a professional situation with somebody we don't know. So if you're not clear about the benefits to them when you reach out, as this has not much reference to that, only indirect way of determining that, then you're not going to get reading time.
So these ones were, I would say, on the easier side for us to pick out what worked and what didn't work. Let's start getting into some ones that are a little more nuanced. All right, this one was, hi, founder name. I'm checking on your next fundraise. We invest in companies with a run rate revenue of 2 to 20 million and year-over-year growth of over 50%. We lead or follow in 1 to 10 million growth rounds, can do special situations like inside rounds and note cleanouts. We've made 20 investments, can commit in 3 weeks, and our check is $1 million. I'm the managing partner of a firm and the chair of our committee. I do the work and we'll get to a quick no or push hard to a commitment. If we're fit and you're doing a round, let's explore. If timing would be better in 4 to 6 months, I can check back. If you'd prefer that I not follow up, just let me know. Or there's a link below you can click, and there was an unsubscribe link at the bottom of this. What do you think of this email?
Yeah, I mean, I think it's getting closer. I mean, to say there's a hit the unsubscribe if you don't want to hear from me, again, just it yells that there's nothing personal in this email. If they would have left that part out, you'd have been okay. It's concise. We understand what you're bringing to the table, but to then just say hit the link if you don't want to hear from me, just that the recipient's just going to feel like they're one of a million that this company is reaching out to.
Yeah, I mean, you've got the managing partner saying it's them who's reaching out, and it could be one of two things. Either they're a large firm and it's such an important thing to them that here is the managing partner going out to, which is great to have that hands-on interest. Or on the other hand, they may be insubstantial and may not even be convinced of their own capability to the extent that they put don't email links at the bottom and point you to it as well. And it feels like it's in the latter camp, which is less inspiring for someone than it would be if, as you say, Ron, it's going in the right direction. If actually it was someone hands-on who's not going to delay about things and actually is so interested that the managing partner of the firm's going direct to you.
Right.
Great points. All right, let's go to email number 6. Again, this gets a little bit harder now. This one looks pretty personalized. In the subject, it was founder name, chat next week, and then in parentheses, the firm, the investment firm. So founder name, congrats on the recent fundraise. Imagine it's an exciting time for you and your team. As the first description of the product, again, customized here, your company is both solving a real pain point and creating tangible value for professionals across your client base. Particularly poignant for me was that both you and your co-founder experienced the pain point firsthand. Would love to connect over the phone and learn more. For some context, I'm with investment firm, a B2B software investor with 27 years of investing in companies such as list relevant portfolio companies. From what I understand, your team has built a compelling offering. I think it would be of great value to get a dialogue started. What would be the best way to get on your calendar next week?
Yeah, I mean, it's the right step towards personalizing it. I like how they talk about the pain points, like they understand it and reconciles it to their experience and some situations that they're intimately aware of. So it's starting to now the nuance here is they're starting to talk pain points and potentially that they can resonate with those pain points. It shows just an understanding of what's going on. So I like that part of it.
Yeah, I mean, if you dig not far beneath the surface here, you could send the same email right across the board, thousands of companies, just because it says that you're solving a real pain point, creating tangible value, etc. And what's poignant, that doesn't apply to anything specific to this company. Although you're going to get a name in there. This could be any number of companies. And actually, the thing that I found most difficult about this one was the subject line, because Paul, chat next week, is clearly part of an automated generic outreach that I think I've seen before many times. It looks like a repetition actually of a standard template. So unfortunately, it's still a miss, even though it's heading in the right way of suggesting where you have points in common and thinking more about the target than it is about the sender.
Yeah. When I saw this message, what I found interesting about this is I think it did a lot of the things right. I agree with what Ryan said initially of customizing, personalizing. Yeah, the last sentence of the first paragraph can be generic, but with the customization up front, this looks like a message that was written for you, and it probably was to some extent. I love the establishing of credibility of this investor and really going into the depth of relevant portfolios, why they have a track record. But as Paul mentioned, the subject line is what actually kills this email because, and I can tell you this experience as a founder, around when you raise funding, you get a lot of sales emails, outbounds from BDRs selling you services and products, recruiters. You get a lot of those messages and they all look like this. In fact, I think there's a template that says name, comma, can we chat next week? So this ends up in your inbox. You read it quickly. You may not know the firm is an investment firm right away. You may hit delete if you're not interested in that service. So you run the risk here, really looking like sales. And that's a big point I want to bring up for investors, corporates, investment bankers. You want to differentiate. Your email is elevated. You're talking about M&A and investments. You're giving the founder money. You have to change the way that you message to them, especially in the subject line. Okay, let's go to email 7. So this one, the subject was personalized. It was the company and the firm name and asked for an introductory call. Dear founder, nice to meet you. By way of introduction, I'm an investment banker at bank name, a fintech focused investment bank out of this location that works with companies like you on sell side M&A and capital raises. Your companies list up the product, caught my attention, and I believe our deep industry relationships with leading strategics and financial sponsors in the space will be of value to your expansion journey going forward. Our most relevant deal experience is our sell-side advisory to a listed similar company, now merged with another similar company, a leading SaaS software platform serving customers of interest to the company on its equity investment. As a thought leader in the fintech space, we also published quarterly executive briefings that was a link and original infographics on topics such as, and picked a relevant topic. As we have never spoken, would you be open to a quick 20 to 30 minute introductory call in the coming weeks? I'd welcome a chance to share more about our firm and hear about your plans in the business. Even if there's nothing actionable in the near term, it would be great to establish an ongoing dialogue and see where we can be helpful as you continue to scale. Please let me know what works best on your end, and I will circulate a calendar invite with dial-in information. So there's a lot there.
Yeah, but it's better. I mean, two things I really like about this is, they're establishing some value. Here's, these briefings that they can go click to, and they're adding value by producing this timely and relevant information. That's a value add. I also like, the focus on relationships. Hey, there may not be a transaction, we may not doing business, but we still want to talk to you and just see how we can help. That cadence and that dialogue to me really resonates. It's not, let's close a deal next month. Let's just establish a relationship. And I really like that part.
Yeah, I mean, factors, there's so many things right. So that they end up getting it wrong because they try to tick every box. There's so many effective themes here, but you can't try and do everything. It'd be better if you just chose, one of the quarterly executive briefings that was really relevant, something that just happened in the business, and pulled that out and focused on that, or one particular transaction and really tried to make that as customized as possible and to try and hit every single box in this. But there is a catalog there of different ways in which you can engage more effectively and source more effectively. Unfortunately, if you try and do it all, I think you lose a bit of the impact.
Yeah, that's a really great point. There's an art here, and while this is a highly custom email, you've got 10 seconds at best to catch someone's attention, and every 10 seconds that resets for a founder. So you have to bring them and down this journey of your message, and the scattershot approach sometimes works, but to get it to work more consistently, as Paul mentioned, you have to provide immediate value. Don't try to give the world in your first message. All right, we're gonna shift gears a little bit in the next one. And we're going to run a live poll. So let's run a live poll here. First poll, and this is on subject lines. We're going to do a rapid fire. The first, what would you pick? We invest or invested in the name of a competitor versus just investor intro. So you're able to turn on this poll. There we go. All right, get them in. Option 1 or option 2? We invest or invested in a competitor's name, or just investor intro? Okay, so answers are in, and we're just 50-50. We're actually 48%, and we invested in a competitor name. We're 52% investor intro. This is a tricky one. And the reason this is tricky is investor intro is a very generic subject. But when we talked to founders, they said, almost categorically, if you invested in our competitor, we don't want to talk to you because you may be digging for information. and we don't want to give you information that would compromise our competitive advantage. So you have to be very careful about calling out true competitors versus aspirational or comparable companies. Okay, let's try the second poll. This one is congrats on your series, whatever funding round, or meeting with and list out one of your portfolio companies. All right, polls out, get them in. Okay, answers back. Again, a really close one. We had 43% on the congrats, 57% on the meeting with portcos. Our perspective here, and going back to 2 emails before, is the moment, and this is really applicable to venture investors and growth equity investors, the minute a company raises a seed, A, B, C, founders get flooded with emails. So congrats on your round looks like the 1,000 emails that are hitting their inbox every month. You just become another one of those. Now, meeting with a portfolio company, if it's the right one, again, an aspirational company, a potential strategic acquirer, better yet, a customer, gets the attention of your CEO or your founder. And again, may not be the best line because you don't know what you're meeting about. But when you put these side by side in tests, the right side is going to work better than the left side because of that fatigue that founders are seeing from the congratulatory emails. Okay, let's go to our last poll. Company name. So that's the target company with a less than or greater than sign. And then the firm name, your firm name, or company name plus firm name. All right, get them in. Let's see, audience says this was a dead 50-50. And the answer here is there's actually no real answer. This is pure preference. You can choose plus, you can choose carrots. Different people write it different ways. It's actually really interesting that this was a dead even one because it was supposed to be a trick question. All right, so let's continue down the line with a couple of more emails. Appreciate everyone participating on those. Let's get back to emails. So here's email 8. This one was an interesting one. This one was in the subject line, company name and the firm name. Again, in our poll, they used carrots instead of, or less than or greater than instead of a plus sign. And said, hey, hope you had a nice weekend. As discussed, I've been tracking you for some time, but have yet to speak with the team. I know that they are well capitalized, so I just want to open the dialogue with the team and build our relationship over the next couple of months. To the extent helpful, I thought it would be best to outline a few strategic areas where we could support the team. First, they list out portfolio introductions, and they actually included some relevant portcos. Second, they talked about other customer intros, talking about their LP network and their connections to relevant companies. And then third, they talked about international expansion and listed a couple of examples. If helpful, I've included a quick overview of our firm below. Couple of sentences. Let me know if you'd be interested in chatting, and thanks in advance. I know this is a big ask. All right, Paul, Ryan, what do you think?
Yeah, I mean, I like it. Again, it's kind of like the similar what I liked about the previous one, where there's no urgency. It's, hey, we're here for a relationship, and then kind of communicating this is a long game for them, and then really drilling down on how they can add value. There's a lot to like on this one, in my opinion.
Yeah, I think this one shows how you can actually put something together that's quite long if every element of it is directed towards the benefits of the recipient. it'll be important what the examples are when you go into that level of detail. They need to be well selected. We assume they were, but if it's all positive, you can actually get away with being this long, this descriptive.
Yeah. Again, what I liked about this was the breadcrumb style. Acknowledging the objection up front. You're well capitalized. You have a lot of money, but I want to provide value. Okay, you get to the next paragraph. There's a lot of information here, but you look at portfolio, customer, international expansion. Maybe all three are relevant. Maybe one is relevant, but you have bullets to align value to. You understand who the firm is. And then there's an acknowledgement that this is going to take up a lot of time, saying, hey, I know you're busy. I know this is a big ask. Shows a little bit of humility with the investor as well. But that's why I like this one. All right, let's try another one. All right, email number 9. This one, the subject was intro. There were a couple of portcos listed that were relevant to the founder, investors. So good afternoon. I've noticed the impressive work your team is doing at your company around building, listed out the product detail or what the product does. I'm excited about the platform and the big opportunity ahead. Tools for this market and specifically the pain point are a constant topic of discussion among sales teams at our portfolio companies. That's kind of interesting. At our firm, we've been fortunate to invest in, list out the relevant portfolio companies from the subject, among other growth and early stage businesses, including listed a few more. My colleague is also the co-founder of a prominent relevant portfolio company, and we're based right here in the same city as you. It'd be great to find a convenient time to call and discuss ways we can be helpful to you and your company this year and beyond, especially with introductions to potential customers in our portfolio, and that part was bolded. Hope to chat soon.
Yeah, I like the feel of this, as if I was getting this email, it was kind of a warm, very genuine language. I really like the concept of, hey, I want to add value through my network and I'm here to help you and make those connections. I think that really works in this kind of outreach. I like that.
Yeah, this is great. The question it raises is the degree to which style actually matters, because what they've got here is all the content, they've got all the connections, they've got all the value to give. Great if you've got it, and it makes it easier to write the email. You can just tell them what you got to offer, and they do. So it illustrates how good it can look when you do have benefits in your control in the first place.
I want to give you a little background behind this one that is not actually in this email. This email number 9, was actually sent to Andrew and me. This is from our inbox. And there's a lot of stuff that actually happened behind the scenes. So first of all, this investor requested a demo of our platform before writing this email, took the demo for 45 minutes, understood the platform, then reached out with this email, and then started making introductions actually to our sales team and to others on our team to add value. That is what we consider super connector status, and founders love this. Now, what was really valuable here is beyond this email, beyond this dialogue, this investor started helping us get in touch with even companies outside of his portfolio, because portfolios are limited. They tap out. You maybe have 20, 30 portfolio companies. Maybe you're a large corporate acquirer. You have a certain number of business units. There's only so much you can do. But if you show value beyond your finite, limited set of connections, that goes the extra mile. That would be 99th percentile of what makes great versus good. And that's what happened behind the scenes of this email. So this was really one step in a multi-part sequence that eventually convinced Andrew and me to take an investment from this investor in our last round. And we were really impressed by, again, not just the intro email, but everything around that. So we're going to turn it now to Ryan and Paul to share a little bit about how they do outreach on behalf of clients and provide examples of campaigns that have worked really well for them.
Okay, I recognize this one. So, I just made the point about actually having the substance to be able to make those statements that are personalized. And this is a long one, but essentially, I guess what this has in common in terms of the response that this got was that when the founder did respond to this, they said to me and later said to our client, the potential buyer, investor in them, I get so many of these, but you seem to see what the value could be of combination, or they put it in a slightly different way to that. So actually, I'd done the research and not only had that, but also had the background in the sector to be able to make specific statements in there about areas in which they could make 1 + 1 = 3, right? So the more specific you can get, if you can get that specific, because you understand where they operate, the more effective. So, I went to great lengths here to talk about different, as I described, our client that was interested in them, I used that to demonstrate the way that I understood them. So it wasn't coming across as I've researched you and I think it's great that you do this, this, and this, and I've got a client that has these funds that they like to invest in this way. It was my client is effective in fields, verticals, themes that are obviously close to your business, as I've seen from the way you do this. So just wove it together in that way. But every point in there has come from being specialized in the sector and then having deeply researched that business from a desk. Great if you can call up and get a product demo, and I'll be paying attention to that next time.
And Paul, I'm actually addressing one of the questions a little bit earlier than the Q&A section. It's pretty relevant. Clearly this is a highly personalized email. It's also different when you're reaching out on behalf of a client versus the client reaching out directly. And we understand that there are different dynamics from what we showed before to this one. But how do you think about doing this at scale? Because it seems like it takes a lot of time to really know an industry. Do you have any advice or tactics to take this personalized approach and get the volume you need to get a deal done?
Depends. Exactly. There's two ways of doing this. You can try and create a generic framework and see which templates work with style that you can basically pull the wool over the eyes of the founder and make them feel personalized when it's only been sent personalized, right? And on the other hand, if you want to get to the same number of positive responses and deals, you can aim to send out a smaller number, more heavily customized. And you get to a high rate of traction. When we go out on behalf of a client, the last 20 outreach campaigns we've done, where we'll talk exactly about what the rationale is and make it very specific. We might send out to 30, 40 companies, and we'd expect to get through to over 70% of those, which is probably what you'd love to get if you were sending out 10,000, right? And you can do it like that as well. But if you're a specialist in a sector and you spent time researching the businesses and deciding the right businesses, and you've been genuinely mandated to go out to those businesses, then you can talk to them in a certain way and invest the time knowing you're going to get the right outcome.
Yeah, that's a great point. We call that process thematic outreach. So the more specialized you are in your searching, the more targeted your list is. There's always a balance. Let's say you were reaching out to pizza places, and you can reach out to pizza places and talk about pizza and be very custom in how you talk about that industry. Or you can split up that list and talk about the cities, so pizza places in New York versus Chicago, and deep dish versus thin crust. There's always a trade-off in that, and it takes some optimization to understand and some testing to understand what balance works for you. It may be 1,000 emails with a 1% response rate works for you, or it may be 50 emails with a 25 or 30% response rate works for you, depending on how many people you have dedicated to this, how much time you want to spend on each campaign, and what the value is to your firm. Are you doing a roll-up where you need to acquire a ton of companies, or are you just trying to do 1 or 2 or 3 deals this year? So Paul, appreciate this, and really impressive on the 70% engagement and 20 projects involving this type of outreach. So let's turn to Ryan. Ryan, tell us a little bit about your campaign that recently led to an LOI.
Yeah, so this was I read this and I cringe on some of the the language here, but the client was looking to grow through acquisitions in a multi-state geography. There's also a service diversification strategy. So I built this. This was pretty much a stock from a message perspective. And then I would go in and do a little research on the company that was about to receive this email. And this had, a handful of management meetings and an LOI crafted. So it had some success. I think that the lesson here is I see two things. I completely missed an opportunity to use the research that I had. So this third paragraph says, I researched your company. I mean, I really should have mentioned something more specific, saw X, really liked Y, and really missed the opportunity to personalize it. And my last sentence is a complete disaster. But I think the takeaway, as I said, just jump on a phone call twice in 2 sentences. I mean, it's clunky. But I think what may have led to some success in this campaign is it does kind of come across a little bit, it's genuine, but the email doesn't have to be perfect. Like, this is by no means a perfect email, but it got a good response rate. So I think this is a good lesson of, every word doesn't have to be perfectly crafted for a good response rate. It just needs to come across personalized and genuine.
Ryan, appreciate that. You didn't have to roast yourself. But it's a good point. We can find flaws in every email. We can find good things about everyone. Once you start getting the reps in, you start trying it out, you're going to see what works. And for this campaign, this worked for you, Ryan. And this level of customization worked, and you're able to do this at scale. And that's what you're going to learn throughout running deal sourcing campaigns. It's all about what works for you. If your firm is really well known on the street, you may not need to explain who you are. If you're a new and upcoming firm, you're going to have to explain who you are. You're going to see different things, again, based on your background and the value you provide. So just to summarize and to get to the Q&A, our takeaways are the I have money and I want to invest in you doesn't really work anymore. You have to know your audience, anticipate their objections. When we did our research, we heard of 2 things that are most important to founders. One, everyone wants a lot of cash and they want to make sure that their business is valued what they think it is. So everyone cares about large valuations. Now, oftentimes you can't just come out and say, we think you're worth X, because private markets are opaque. You don't know their revenue or their EBITDA or their growth, but you can signal to your ability to pay based on how large your fund is, your market cap, if you're a strategic, the size of your client, if you're an advisor, what a typical M&A deal looks like at your firm. Is this a majority deal, a buyout, a minority investment? Are you providing secondary? And how you assess a fair deal, the things you like that makes a company valuable. We love that you're a software business. We love recurring revenue. You can say things that signal that you value this business more than another one. That's number 1. Second takeaway is business owners care about market expertise. No founder wants to get on a call and educate you as an investor about their business. So they want you to know what you're talking about. They want you to know the basic industry lingo, and they want to make sure their company is going to be in good hands with you as the potential investor or acquirer. And a lot of times, especially experienced and seasoned founders who are on their second rodeo or who have friends who've sold their businesses, have heard the horror stories of what's happened post-acquisition. So they start thinking about, are my employees going to be treated well? Will my business continue? What's going to happen post-sale or post-investment? Those are the 2 takeaways. Signaling valuation, signaling market expertise will have a significant impact on your campaign quality. So our 4 takeaways for today: 1, give more than you take. You're asking for time, you're asking for their attention, so give them something. 2, outbound sourcing is a long game. Sometimes deals can happen in 2 months. You hear of it. Other times it can be 2 or more years. But remember, If there's not a deal today, it's going to be a deal tomorrow. 3 is know your target persona, so know your market, know who you're reaching out to, do the homework. And then 4, just some things are out of your control. You may have the best email ever, and the founder does not want to sell their business. Again, that may be a not today, maybe tomorrow, but you may not always see what you want to see at the time you want to see it, because there are just factors in M&A, in investing, that are outside of your individual control. So if you take these 4 back, we think that'll lead to successful campaigns. All right, on that note, I would love to open the floor to questions. I already saw a bunch of questions coming in, so I'll direct these to our panelists. The first one that came in, we actually addressed part of it, of how do you personalize at scale. And we talked about targeted thematic campaigns that allow you to be custom and segment lists in ways that it looks custom to a larger group. But the second part of this, the one person asked this question said, I agree the examples are fluffy, but the reality is that in the lower middle market, most companies are opaque with publicly available info. So how do you not attempt to qualify yourself and add length as a result? So really talking about, with limited information, how do you get custom without getting too long? So if you could all talk about this, because you know, Ryan, Paul, you work with private companies all day, I think that would be helpful for our audience.
Yeah, I mean, I know it's challenging, and there's sometimes very limited information. I think that, you know, in terms of what I do for context, you know, I try to dig as much as I can to find something that's unique. You know, and that could vary, you know, and this is kind of going back to Nevin's comment. I mean, you got to pick and choose where you want scale and how much research you want to do. But, you know, spending time on the website, LinkedIn, just finding something that you can drop into that email that suggests that you've spent some time researching them, you know, to make it as personalized as you can. And sometimes, you know, I send some generic stuff out that I couldn't find any information, and that just, you know, that I think that's just, sometimes you have to accept that there's limited information and you're hoping that, you know, something resonates. But I always try to do some level of diligence on before I send each email to see if I can personalize it in any way. Because I think just that, if you added one sentence, you know, use this example, if there's a bio on their website and they say they went to some school or like fly fishing, you know, dropping that in there, saying that you at least read that, something that just personalizes it, I think can go pretty far.
Yeah, totally agree. If you keep looking, you'll find something typically. And, you know, after all, if it's worth investing in, they're probably capable of demonstrating their proposition and how it's unique in some way or other, right? Whether it's on the site or whether there's individuals that the founders have approved of something or made some very short comment, it actually demonstrates a sentiment, which they probably would like that sentiment to hold true for their company as well. So if you apply the thing that they've said about something different somewhere to the way that they, you know, the way to their company, I think you can come up with something that's appealing to them. I'm saying that, remembering that email that I just talked through, that is very personalized, and, you know, there are lots of case studies and things, but actually it was something personal that one of the founders had said that I thought you could turn that around to talk about the way that innovation and design came together in that business, and that I think was what resonated. So yeah, there is something, and it's worth it, because, you know, that the right conversation can be a deal, and you can't just be playing a very large numbers game.
Yeah, and my perspective on this question is, there's always juice to squeeze out of the rock. You know, like we go back to the pizza example, there's not a lot of information on pizza companies compared to, let's say, an established tech company. But with benchmarks and with qualitative information, knowing they sell deep dish, knowing that they have a unique eggplant parm, that they have great reviews on Yelp, that can all lead to a better message. So you can make information out of the limited info you have by looking and referencing similar or aspirational companies and looking a bit deeper on what may be surface level as a service offering or positioning of the company. that could engage that founder in a conversation. All right, another question. I really like this one because a lot of professionals who do deal sourcing, especially on the buy side, so private equity, growth equity, venture capital, tend to be quite young analysts in the first few years of their career. So this question is, how can a young deal sourcer who doesn't have much experience still write strong outbound emails? How do we convey experience? How do we as young professionals add value to a founder who is likely much older?
I'll go first on this one for once. Yeah, I think I've had the experience of having someone reasonably young in the team who was extremely effective. And it was a mixture of knowing a handful of the buzzwords, but it was courtesy and humility. They really worked. You know, if you're a founder and you're receiving something, you can have a sense, or you'll check the LinkedIn, you'll see who it is who's writing to you, and you'll see that they're young, you'll see that they're junior. You won't be thinking this person's going to write the check to me. You'll understand how it works. But there are points at which I think it's appreciated, the insistence that with courtesy and with understanding, with having taken the effort to really get to know them, that works. And I've seen it work many, many, many times.
Yeah, I have really not a lot more to add to that, Paul. Those are good comments. I think that, looking back at my career, when I was, sending outbound stuff as a younger, I think that it just puts more pressure on making sure your message is resonating. I think if you're young and you're worried about that, then you got to nail the messaging. But I think, the hustle factor, I like to call it, goes a long way too. And like Paul said, if you're not the decision maker, that the recipient's going to know that. Maybe it's not hiding from it, and it's just addressing it and nailing on the message.
Yeah, my view on this for the younger folks is your personal experience may not carry as much weight, but remember, you're working for a firm. And if you can connect the dots with your firm, in fact, that email number 9, one of the best emails we ever got with a super connector, this person was maybe 3-4 years tops into their career, and they connect the dots between the portfolios and the customer intros. Others have built credibility with the size of the firm. You'll have to use things that are not about you personally, but about the credibility of your organization and your peers at that organization. Mm-hmm. All right, another one, and this is actually a good question because we didn't get into this so much. We showed one-off emails. This question is about any recommendations of how to approach email sequences. For those in the audience who don't know what a sequence is, that is a series of emails set out on an automated campaign, sometimes called a drip campaign. This question is around number of emails per campaign, how you spread out the timing of them, how you drip content. So any best practices from Paul or Ryan on really sequences?
So I don't have the claim to have the master plan on this one at all. I think, I've seen these work so 3 or 4 days on. I've seen these work on a weekly cadence. So typically, though, if you keep writing long things, after the first one, you're really probably asking for it. So I think I would say keeping it short, maybe introducing some single other fact that could, might have emerged in the last week or something since you wrote the email before, that you've observed on their progress of their company somehow could be useful. But I think it's persistence. I've seen these ones go for 6-7 weeks and then get an answer. And I also see emails come in that say, if you don't answer this time, I'll never send you one again, which feels like that one with, if you want to get rid of me, you click on this link at the bottom. I think, that doesn't need to be said. You can keep going. You can be put in junk if necessary.
Yeah, I think that I don't have a silver bullet on this one either. I use my gut and kind of measure it for each client. But I think the lens that I usually have with this is showing persistence without being annoying. And depending on the length of your campaign or the engagement that you're working on, what's going on in the industry, there's a lot of things that you can kind of just sense if if it's too much or too recent. This campaign that we showed this example, I did, one email a month. So it was roughly a 30-day window of no correspondence. And it kind of goes to the second takeaway. This is a long game. If you're sending an email every week, and there's no responses, it seems a little bit more desperate, in my opinion. So it's taking that long game and making sure those drips are, persistent but not annoying.
Yeah, I think those are both great points. This was actually this is not a plant of a question, but I do have a slide in the appendix to showcase some of our best practices, just to follow up, because the next question was also about this. We typically see sequences work best like this, where there are long gaps, and it could be, as Ryan said, maybe a month between a follow-up or several weeks. But there's also the double tap strategy, which can be a couple of days after. That's just, hey, just want to see if you got my message, or a quick follow-up. That can work in kind of little bouts. There's also things you can do in between a sequence, between emails, like just sending a LinkedIn connection, not asking for anything. That just gets you in your target's mind, and they just think about you for a moment. Sometimes people place a call and say, hey, just following up on the email I sent you. Calls can work better in certain industries. And then oftentimes at the end of the sequence, which could be 4, 12, 16 weeks later, there's the breakup email of, hey, I've been trying to reach out to you. Sounds like it's not a great time. But if you want, you have my information, please reach out. And it's kind of signaling, hey, I'm going to stop emailing you for now, but I'm going to leave the door open. So a couple of best practices, just what we see from the data. There was another follow-up question to that around the times that you send emails, mornings versus evenings, what you think works best, even like weekdays versus weekends.
In terms of, for me, I haven't, honestly don't have an answer to that. I think I try, if I was going to do, when I think about doing a campaign, I try to put myself in the recipient's shoes. If I have a contractor, for example, and they're usually out in the morning pretty early, I'll think about that. Maybe it's something that's really early in the morning to maybe catch their eye. But I've done a little bit of reconnaissance and looked back. I personally have not figured it out if there's a sweet spot. I think it's, unfortunately it's somewhat luck. It's, you do your best to time it, but I've seen mornings work. I've seen late in the day work. I've seen Fridays work. I think it's all over the board.
Yeah, I agree. I don't think there's a secret formula to this. I've heard things about not sending things on Friday afternoons, and I've heard things about not sending on holidays. But if you're a founder, when might you be thinking about taking on investment or opening the door where you weren't thinking about it before? Can happen anytime, can be when you got time off. So just lots of A/B testing, I'd say.
Yeah, I think I really like what Ryan brought up about know your audience. I personally, and the question asker asked, what I think, I personally respond more at night, just because during the day I'm in back-to-back calls, meetings, getting pulled into things. As Ryan mentioned, if you're trying to get in touch with the contractor, they're going to be out in the field, so they're going to respond evenings, weekends. Know your audience, know who you're messaging. If you pull up their Facebook and they just had a kid a couple months ago, chances are they're probably not going to respond in the evenings. So just know who you're reaching out to and make an hypothesis. Anyway, next one. I know we're just at 2 o'clock and a few folks may sign off. I really think we have some great questions here. So as long as Ryan and Paul can spend a couple extra minutes, we'll go for a few minutes longer. So one question was around, if I get a higher response rate from sellers in a roll-up strategy, if I offer to meet with them personally when I'm in town. If you have 100 calls to make, those isn't very time efficient. Do you use this strategy?
That's a great question. I'm an in-person relationship guy. It's just what I like. So anytime that there is an opportunity to throw out, I might be in town, would love to grab a cup of coffee or lunch with you. Yeah, it's not efficient, but I don't, there's some efficiencies we want in this outreach, effort for sure, but nothing beats, making the extra effort and showing that you're willing to take time to meet with them in person. If you happen to be in town, I think it's an effective strategy personally.
Yes, definitely phenomenal if you can do it, right? So worth offering it, and if it happens, it greatly increases the chances of starting a lasting relationship that can turn into something further.
Something else people don't realize is you can send 10 emails to someone in a city. Let's say you're going to Little Rock, and if you get 4 responses of people wanting to book meetings, then you can book the trip. So you can say, hey, I'm going to be in Little Rock. Do you want to meet? And if not enough people respond, you could say, hey, last minute plans change. Let's do a call. 1 responds. But if 3, 4, 5, and you book a whole day of meetings, you can then book that flight after. Not a lot of people realize that. Okay, I'm going to ask a couple more. When you're reaching out to owners multiple times, are you responding on top of the same email or sending a separate email with a new subject line? I'm typically more of the latter, but curious if you had positive results with the former, just sending on the same chain.
We've done typically the former. That hasn't got in the way. So occasionally we'll send someone else will send the mail, so it comes from a different person, and may even reference the former email. So following up on that, I think it's one easy way of personalizing it. So hasn't been an issue for us not starting a fresh chain.
I don't have any data either. My style is call it the former, where there is a string of emails. My thinking there, wrong or right, is let's say the owner happened to miss your emails for whatever reason, vacations, busy, not out of lack of interest, just hasn't gotten to it. And it's the optimist in me. Well, if you hit them with, hey, just following up on this email, I know you're busy, and you actually catch them at the right time, he or she can now go down to the base of the email and reacclimate to what the initial outreach was and some of the messaging you had in the first, your first outreach, to catch him up or her up as quickly as possible. So when they do respond, they feel like they've got the data at their fingertips. But that's a style thing, and I don't necessarily know if that works or not, but it's at least how I think about it.
Yeah, my advice here is if your subject is getting opens, you want to reply to the same thread. If it's not, you want to freshen up the subject line, because if it's getting opens and not responses, it means you can get the email opened, but they may not have time, or the body may not be resonating. Opposite if it's not even getting opens in the first place. And you can always, again, if you're doing this at scale, you can always A/B test. Okay, one of the last questions. I've heard it takes 14 attempts on average to get a response. Is this your experience too? What's your experience?
Like 3 or 4, 5, probably on average. I don't think we'd normally go beyond, as I said, 6, maybe 7. But I say very, very targeted, very thematic, and that's going to be a different result to what this is talking about.
Yeah, I mean, I think that 6 and 7, outreaches with no response. I intuitively say, okay, there's nothing here. I think you have to also realize that there's some level of randomness to outreach. So maybe it is 14 if you're again playing the long game, and maybe that 14 was over it's different if those 14 outreaches was in a 2-month period of time versus 2 years. So if it's 14 and you're playing the long game and it was after 2 years, situations may have changed for that owner. So I think it depends on the time scale. But I'd say in a short burst, that 6 to 7 feels like, all right, they would have responded by now if they were interested. That number feels about right.
All right, guys, last one. Appreciate you staying a few minutes longer. But these are, I feel like, really good questions that I wanted to answer. Last one is, which tools, software do you use to help scale your outbound email campaigns?
We use HubSpot, we use Grata. Those are two key tools.
Yeah, can't say that I'm necessarily trying to scale. I try to personalize the outreach I do. But I use Grata for my list building, and then I'm on Google, so I've got the Copper CRM, which does a decent enough job. But I can't say that I've really tried to scale. Like I said, I take a pretty personalized approach to my outreach.
Again, thank you, Ryan, Paul, for joining us today, providing really deep insight on what you do every day. And of course, thanks to our attendees and listeners for joining us and supporting us, and hope you learned a thing or two today. And we will send out the recording after. Hope you all have a great afternoon.